Hello everyone. I'm Airav, and you are listening to the 723 episode of our Here and Now podcast. This is where we unpack the latest stories shaping the insurance industry. So, stay with me, because we've got some fascinating updates lined up. Let's get started. Our first story today from Business Standard highlights a significant development in social security schemes. The government is reviewing a proposal to raise insurance coverage under the Pradhan Mantri Suraksha Bima Yojana (PMSBY) and Pradhan Mantri Jeevan Jyoti Bima Yojana (PMJJBY) from 2 lakh rupees to 5 lakh rupees. Department of Financial Services Secretary explained that multiple scenarios are being evaluated, including affordability, premium costs, and intermediation expenses. Launched in 2015 as part of the Jan Suraksha initiative, these schemes provide low-cost insurance linked to savings accounts through autodebit. PMJJBY offers life cover for individuals aged 18 to 50, while PMSBY provides accidental death and disability cover for those aged 18 to 70. Currently, PMJJBY charges 436 rupees annually for 2 lakh rupees cover, and PMSBY offers the same cover at just 20 rupees per year. With enrollments crossing 274 million for PMJJBY and 580 million for PMSBY, the proposed hike aims to strengthen financial security for millions of Indians. Our second story today from Hindustan Times focuses on the impact of erratic weather in Himachal Pradesh. Horticulture and Revenue Minister of Himachal Pradesh announced that the state government has begun assessing crop losses caused by recent hailstorms, which have severely affected apple orchards, a key livelihood for farmers. While the exact extent of damage is still being determined by teams from the Revenue and Horticulture departments, he stressed the importance of weather-based crop insurance and urged farmers to enroll in the scheme. Currently, only 70,000 of the state's 2.5 lakh orchardists are covered, prompting the government to conduct workshops and awareness camps to boost participation. He also highlighted that a special package for hailstorm damage is available with an additional premium, and compensation has been increased from 750 rupees to up to 1,500 rupees per tree. Leaders emphasized that insured farmers are already benefiting and encouraged others to safeguard their crops against unpredictable weather. Moving forward with our third story from CNBC TV 18, commercial insurance rates across India, the Middle East, and Africa, IMEA, saw a sharp decline in the first quarter of 2026, with India experiencing some of the steepest drops. Marsh's Global Insurance Market Index reported that property insurance rates in India fell by as much as 45% in certain segments, while directors and officers, D&O, liability and cyber insurance rates declined around 30%. Overall, the IMEA region recorded a 10% fall in commercial insurance rates, compared to a 5% global average drop. The decline has been driven by strong market capacity, increased competition among insurers, robust reinsurer support, and stable claims conditions. Globally, this marks the 7th consecutive quarter of falling rates, reflecting a softer pricing environment and offering businesses opportunities to reassess their risk management strategies. Our final story today from Money Control highlights the growing interest of global insurance brokers in India's commercial insurance market. India's commercial insurance market is still in its early stages compared to retail insurance, offering vast opportunities for expansion. Existing player has already expanded their footprint, and now a fresh wave of international intermediaries is exploring entry through partnerships, acquisitions, and joint ventures. The demand for corporate risk solutions is rising rapidly as India's economy expands, driven by infrastructure, manufacturing, renewable energy, logistics, and digital services. Companies are increasingly seeking protection against emerging risks such as cyber threats, climate change, and supply chain disruptions. Unlike retail insurance, which is crowded with agents and aggregators, commercial lines offer higher value opportunities, long-term corporate relationships, and advisory-driven models. With strong regulatory oversight from IRDAI and India's growing financial networks, the country is seen as a strategic market where global brokers can leverage expertise to capture significant growth. And with that, we conclude today's episode. We hope you found these in-depth updates helpful and insightful. As always, our podcast Here and Now will continue to bring you more stories from the world of insurance. Until then, take care, goodbye, and have a great weekend.